Hey there, Ashley here with Fields Accounting Firm. It is true that your taxes can be affected in the event that you are married. Now, this effect depends upon the way that you file, and this determines if you will owe more or if you'll break even or get a refund. So we're going to go over a couple of scenarios. So if you and your spouse are deciding to file married joint, a scenario could be that both persons work. Now, what happens if both persons work and you decide to file married joint? When you combine your income, when you file your tax return, depending on what the tax code is for that year, your combined income could actually put you into either a higher tax bracket or keep you the same. And so to determine if it's best for you and your spouse to file joint, you want to be able to collect some data. You need to know, what do you guys make collectively? And when you determine this, you will actually pull the tax table from the Internal Revenue website, and it's irs.gov, and you want to find the current year's tax table. And when you retrieve this tax table, you will be able to file your appropriate filing status, which is married file joint, and you'll be able to find that income range. Now, to determine if you have either underreported your income taxes, federal taxes, or overreported will actually depend on the tax portion with the income range. For example, let's say you and your spouse, after you've pulled your pay stubs, have determined that you both collectively make $161,000. And so you'll want to find a line that's in that $161,000 range. And it could be very well that for married file joint, collectively, the tax withheld needs to be $22,000. And so you would actually be able to look at both pay stubs to find the year-to-date federal income tax withheld. This will be a great marker to determine if you are right on track, depending on what quarter that you are in. This will be able to be a great marker to determine if you have so far underreported taxes. And this is a great idea, a great indicator to determine if you will owe break even or not. Now, the tax table is just a generalization of your taxes, because when you file your taxes, no matter what filing status that you are using, you are either subject to the standard deduction or the itemized deduction, meaning you have other write-offs, like you own a home, mortgage interest, you may have ties or contributions to charity, property taxes, the list goes on in terms of itemizing. And so whether you are taking a standard deduction or itemizing, which is your best tax strategy, this can very well lower your taxable obligation. And so what you see on that tax table may not be what it actually would be on your tax return. And so this will require some tax planning. And what I advise clients, especially clients that are in my office, I automatically know just based off the history of the tax filings that I've conducted for the client. I know that they have a home. I know that they have dependents. I know that they have medical expenses, because we are pre-planning every single quarter to make sure that they are on track, because my goal for all of my clients, and even for you watching, is to make sure that you are not surprised at tax time. And so I tell all of my clients, and I am now telling you, that the best time to tax strategize is before the upcoming tax season opens. And so ideally before the end of the year. And if you are looking for IRA contributions, Roth contributions, that's the only exception that allows you to contribute during that current tax year versus the year prior. Okay, so married, filing joint, you want to make sure, especially if both persons are working, you want to make sure that so far that you guys are both individually and collectively, like I mentioned before, your total income could very well put you into a higher tax bracket. And so you want to make sure that collectively, separately, that you are meeting your federal and your state income tax obligation, okay? Now, so we went over married, filing joint. Now let's discuss married, filing separate. Now, this is a very, very, very popular tax strategy for clients, especially my high income earning clients. And it could be that both persons are working, and it may be beneficial to keep them at a very desirable tax rate range to file separate, because like I mentioned with the married, filing joint scenario, filing together could very well put you into a higher tax bracket. And so I've suggested clients like, hey, you need to file separate because it's advantageous for you. Now, filing separate has its cons though. When you're filing separate, you can lose out on other deductions such as the student loan interest. And if you have dependents, especially when you're filing married joint, that affects the tax return. But when you're filing married, filing separate, then you have to determine who's going to file the kid. And the biggest misconception, especially with dependents and that earned income tax credit, is that everyone is obligated to that on their tax return. And that's not the case, because the earned income tax credit, I'm specifically talking about earned income tax credit, is for low income persons or persons or families who meet a certain income threshold. And it typically phases out significantly after $35,000 or so. Now, this is just the earned income tax credit. This is not the child tax credit, which is $2,400 per child. Now, when you are filing separate, that is a decision that both parties have to make. Who is going to claim the child on the taxes? Unfortunately, you can't share the child tax credit. However, if your child or children have child care, then that may be an option. One person takes the child tax credit and the other person claims the child care. But that's not the topic of this discussion. I can make another video on that portion if you are interested. But I was just letting you know your cons, things that you'll have to consider if you do decide to file married, filing separate. You lose out on the student loan interest deduction, and you may be forced to itemize if your spouse decides to itemize with that married, filing separate scenario. And so, like I mentioned, that these strategies require tax professional help, and I can help you. And if you have any questions, you can also ask them in the comment box below, which is your free advice. And so I can ask any questions that you may have. So if you decide that married, filing joint is not the best strategy, married, filing separate is, just like I said before with married, filing joint, you want to make sure that you both separately are meeting your federal and state income tax obligation. The same rules apply for married, filing separate. Now, the biggest issue that I have seen in my lifetime of having my accounting firm, which has been 10 plus years now, when clients have filled out their W-4 with their employer and they do married, filing joint the whole way, but at the tax time at the end of the year, they decide to marry, filing separate. That scenario typically does not work out often, but that again is dependent upon your write-offs, what you're itemizing in your tax scenario. You could be over-reporting your taxes, or which is ideal versus under-reporting. And so When you have filled out your W-4 with your employer and you have chosen the status married, filing joint, what that does, you are literally telling your employer, my intention at the end of the year is to file with my spouse joint. And oftentimes when you determine when you file your taxes, especially if you're not pre-planning, which like I mentioned is done throughout the year, if you don't plan that and you decide, oh, let me file separate, you may find yourself, if you don't have significant deductions, which can be, many, if you don't have any deductions, you may find yourself owing. And that's not ideal. Like I mentioned before, it's because of that W-4 that you completed with your employer. You told your employer that you will be filing joint, which your employer then takes out a certain amount of taxes for federal and state. And so that looks really icky on your tax return when you change your filing status, because that's not how you told the Internal Revenue Service that you're going to essentially file at the end of the year. Now, I've seen that scenario. Now, a great scenario in case that puts married couples in the best scenario, which gives you a little wiggle room to decide to file separate or to file joint, is either to select single or select married filing separate on your W-4. Now, why do I say this? Now, I say this because not only are you separately getting your recommended taxes taken out, but the con for a lot of people, I understand people just for the most part want to break even or get as close to a refund as possible. Oftentimes when you are filing single, when you are married, you're getting the most taxes taken out of your pay, just like a single person would. Married filing joint, you get, certain, deductions, credits and breaks with your taxes withheld. But if you choose to file the married filing separate or single scenario, married filing separate, which is the same as single, you will be getting more taxes taken out. But on the bright side, at least your federal and your state income obligation is met. So in the event that you decide to file married filing separate, no harm, no foul. You will have met your tax obligation. But if you decide maybe during the year you had to make a big purchase, your mortgage interest or any of your itemized deduction was more than you anticipated, it might be beneficial for you to file jointly. And in that event, in that case, it doesn't affect you as significantly as the other option, the other way around, okay? So we went over married filing joint. We went over married filing separate. If you choose to file married filing separate, make sure your W-4 shows that with your employer for the whole year, because that would be the only way that scenario would work out, is if your W-4, which is your tax instruction, this tells your employer how much to take out of your wages. And so you want to, if you're not doing married filing joint and you decide to do married filing separate, make sure your W-4 reflects that, because it may not be the best strategy at the end, because it just won't work out for you, okay? It won't work out for you. So married filing separate is ideal if you want to really be in a great position to decide to file separate or joint versus filing joint and determining like, oh shoot, filing with my husband, filing with my wife, I owe more money. Let me file separate, and only for you to owe way more, and it's better for you to file joint, okay? I hope that makes sense. If not, definitely leave me some comments below and I can explain deeply. But like I mentioned before, married filing joint, I like to recap. Married filing joint can possibly put you in a higher tax bracket. That's where tax planning comes into play. You want to make sure that separately you guys are getting the right amount of taxes withheld. And if you feel that married filing joint puts you in a higher tax bracket, married filing separate is an option. But just like married filing joint, you want to make sure that separately you are getting enough taxes withheld separately. And so when you decide to file separately, you have two options. You can file separate or you can file joint, which would be the best position versus filing joint and then filing separate during tax time, which can have you owe more. Alrighty, I think I cleared that up. I did a rerun just to make sure that you are aware of your changes. And now that's for if both persons work. Now, what if only one of you guys work? Perfect. One of you guys work. It's almost as if when you file your tax return, especially if one person is working, it's not the proper terminology to say that it's like your spouse is a dependent, but it is. Meaning, it's a great position to be in when there's one income in the house, when there's not multiple jobs, because it looks via the tax code that you are taking care of your spouse, and so being that you are reporting one income for two people, you have a higher filing status, but you only have one income, and so you don't have to worry about two incomes pushing you into a higher tax bracket. And so now, even though there is one person working, same rules still apply for married, filing joint, and separate, because you want to also, even though one person is working, you want to make sure that that one job is actually meeting your federal and state income tax obligations. So no matter what scenario, whether it's multiple jobs or one person is working, you want to still make sure that you are meeting your federal and state income tax obligation. But if you are, and you are married and only one of you working, that always is a beautiful tax scenario for married couples, no matter what, because you don't have to worry about owing additional money because your employer is taking the recommended taxes out and your spouse is not working, so they're not increasing your taxable income, thus putting you into a higher tax bracket. Alrighty, so we've covered two persons working and filing joint if both persons are working, or filing separate if both persons are working, or if you are married, filing joint and only one person is working. Now, here's another curveball for you for one person is working. Even though that scenario is a really great position for you, being that there's one income, I've had clients, even when there's only one income and they've met their tax obligation, and it could result in them getting a refund or breaking even or not owing a single thing to federal and state. I have had scenarios where clients have filed separate, and the reasons are various, but one of the main reasons is due to maybe one person owes back child support, and when you file taxes, it could be a case that the federal or state government agency can take your tax refund. Now, and that could be a reason why you want to file separate. But because the one person is working, there's always a scenario for you. For example, because there's one person is working, filing joint is the best position because it gives you more money back on your return. But also, you don't want the federal or state government agents taking your child support or your student loans student loans that you owe, or whatever tax obligation. Maybe you owe the state already before you got married. Maybe you owe federal, the IRS, or maybe you owe the state. I'm in Georgia, so maybe you owe the state of Georgia or wherever state that you reside, and you got married, and you are in fear of them taking your spouse is a person who's working tax refund. There are penalty reliefs for you. For example, the innocent spousal reliefs that we can actually e-file, or you can actually e-file on your tax return. And this lets the Internal Revenue Service know, like, hey, I'm working. This refund that we share is due to my sole income, and I don't want to be responsible for my spouse's previous obligation, child support obligation, or back student loan obligation. So don't touch my money. Yes, we made this together on our married filing joint tax return, but the refund is only because I'm working, not because my spouse is working who actually owes the money. So what that does is, no, it doesn't wipe away the debt, but it also doesn't take away your refunds. Okay, so Innocent Spouse Relief. That's the name of the relief that's really popular for married couples. And you can file for this relief whether you are filing joint. This still applies. And a lot of clients, like I mentioned before, they file separate just to forget the whole scenario and not worry about child support or whatever government agency taking their money. But like I said, there's been scenarios in my firm where I said, hey, if you don't file joint, you're going to be missing out on this certain dollar amount. And so to avoid the IRS from taking your refund, let's complete the Innocent Spousal Relief, and we'll let the IRS know, like, hey, this is my money, and you can't touch my money because it's not my debt. It's a debt that came into the marriage. And so the IRS by law cannot touch your the refund. Now, what happens if both persons are working? You decide to file joint, and one of you owe child support, and they are threatening to garnish any refunds, wages, whatever you may have to satisfy your debts that you came into the marriage. The Innocent Spousal Relief still applies. Now, in this scenario, filing joint, and both of you guys are working, both of you guys collectively have a refund because you guys separately met your federal and state tax obligation, and when you file joint, you got this really nice refund. But also, child support is threatening to take all of your refunds. You can still fill out that Innocent Spousal Relief form, and the IRS will determine what portion belongs to said person, like to your spouse or to the husband or to the wife. The IRS will have their own calculation. In fact, if you are using a tax software, or if you're coming into an office like mine, I can actually let you know via the tax system what portion is subject to be taken away for child support, like what belongs to the husband and what belongs to the wife based off their individual wages and then collectively. All righty. So, yep, that's what changes when you get married. You have some decisions, big decisions to make, and it's not as scary as it sounds. Now, if you are hearing this information for the first time, I can definitely understand the overwhelm of knowledge that it is. And so I can definitely simplify this for you. We can do so via the comment box. And so you can ask whatever follow-up questions that you may have from this video, or you can book a free 10-minute call with me, or if you need more of a tax planner, you want me to get to the meat and potatoes, you can actually visit my appointment tab on my website, and you can either book a 30-minute or an hour live consultation, and we can go over your specific tax planner and the best strategy for your tax scenario, okay? And you would do that by visiting fieldsaccountingfirm.com, and then you'll see an appointment tab to schedule your consultation or to book your free 10-minute call, or you can drop a comment down below. Now be sure to like and subscribe for more accounting videos. Until next time.